Alright, today I bought the Vanguard Energy Fund in my 401k plan. I don't have any other choice but to buy this one if I want to have money in the oil. Why I bought it, if you look at the 6-month chart, it's on a low. So I took money off the tech, took some of the profits out and rolled it into the energy funds, buying on a low. I bought today because if you look at the market, the stock market went up except for the oil is down. So I transferred money over into the oil funds, and this is really the only choice I have. So before I make the buy, I'm looking at the oil funds and I look at the holdings. So I click on this so I can go check out the holdings. These are all the funds that you're buying. So if you're buying gas, maybe you want to have a little money in this. That way, if you're going to the pump, you're making money as well. Um, I take a look at this holdings, and if I see red, I see it's down. I'm anticipating being able to buy it on a lower price, even though the crude oil was down and all these were down today. It really didn't go down. It went up slightly, but pretty much the same price as what it was yesterday. So it looks pretty flat here on today's move. Again, I'm buying just because it's on a low and the tech was on a high. So going over here where I just kind of marked these, I bought this again on the 19th. So I just kind of keep a track here, and I'm going to back it up a little bit here. Um, I had sold on June 3rd, 2022, around 90. And if you back it up, previous to that, I had sold some profits and uh, bought it back. The red is a buy and the green is a sell. I was positioned if it went down to buy back, but it went up, and I made a gutsy call not selling because this much of a rise that quick. Usually I would maybe sell if the percentage was over 10 or 15% in that short of a time, that being from December to March. But I held on to it, so you can see from mid-March where it was here, it shot all the way up here, and I decided to take profits. I did kind of miss. I wish I would have waited one more day and got it here, but it didn't. So I sold it for 90 and bought American funds at 52. I should have bought it back at 75. It was down 70% in just a few days, and I really should have bought right here. I was holding off for 72 and then buy, but I didn't quite get there. So I didn't make the purchase, but I wish I would have now. I should have bought here. I would have been comfortable buying here, even though it came down to here. And sure, ideally, this would have been the best time to buy if you could have seen the chart ahead of time. But with that big a drop that quick, it's a good buying opportunity. So I missed the buying opportunity to buy it back. All right, so fast forward here. So on the 19th, I bought this back at 83. And the American funds, I bought at 52. I sold at 55, 56 almost. You might see my reasons why was one's on a high and one's on a low. So I just kind of move money back and forth between the highs and the lows when I see that. And I'm able to buy it back for 8% less than what I really bought it back for, than what I paid for it. And then I bought it back, or sold it for almost 6% gains. Um, the thing is, I got dividend payments on these funds. So these numbers are not exactly what you would anticipate seeing because we got dividends. So what happened was on the 27th, the Vanguard Energy Fund uh, was at 87 but it would have been at 93 had I not get dividends, plus or minus some of the gains. It's not quite that simple, but if you look at the chart here, this was at 93 and it dropped to 87, but it's not really so much that it dropped, is it paid out dividends. So a lot of times when you see the charts, you'll see a black D for dividends on these things. Sometimes they don't show up on this, and sometimes they do. But if you see black D's or it has that sharp drop, likely that's a dividend payment. So I really got dividends. So it's really $5 change on that. So really you would have to adjust for that. So really at 89 is what I'm buying it at, and 55 is what it was on the dividend payment, but it would have been at 57.80. So you would have to add the difference to this to kind of ballpark where you're at. So I'm more like at a really a 12% gain instead of a 5% gain or 11.5% gain. So again, sometimes these charts are a little misleading. For a more accurate chart, you really have to kind of take this, slide it all the way back up to where it was before the dividend is, which puts you right around here is where it's at. But I'm selling some of the tech. I really believe that tech's still going to go up, so I just sold some of it to put more back in the energy fund. I've been trying to get into this thing forever now, and one of the things is I miss out on dividends not holding in this fund. And right now, 20% of my fund that I do have with this oil funds is all from getting dividend payouts. So if you hold on to it for a few years, you probably will have uh, all your dividends match whatever your investments are. You basically won't have any of your own money in there because you're making money on a mutual fund three different ways. You make money on dividend payments, capital gain payments, and growth of the fund. So if I buy here and it goes up, then I'm making money on the growth. In March, they'll probably have another dividend payment, so I'll get dividends, and then at the end of the year I get more dividends, and usually that's a bigger chunk. All right, so just a little sharing with you why I bought the energy fund today.